right, here we are, folks. US 30. Monday morning. Beautiful morning. We have this push to the upside here. I'll show you on the 1 hour. Come down into the discount here, below the teal line, down in here. We came shy of last week's low here, which was like not last week's low, but the week before. Stop dead here, push up into the premium. We're up into the premium here, but you can see that we deflected right off the daily 50% where smart money likes to sell. The trends are hybrid, but they're kind of down. They're about to change here. We've come to 50% of the range. So basically, we are allowed to take a kill shot here across the EMA 50-20. So we've come up, premium, reached equilibrium, daily 50, trends are down, and this is when we can take the cross the 50-20. This is my second model called the continuation model, based on smart money concepts, using equilibrium, premium discount relationship. When that crosses, we'll go to NinjaTrader and we will take a sell if the market comes back and gives us a nice entry, of course. So now that we're sliding down below the 50, I will switch to NinjaTrader. And here we are. So the cross hasn't happened yet, but the cross will happen somewhere down in here. I'll let you know when, and we will GAN box it, and I'll put my exact entry in for you guys. So unless we just take off and go, which is very possible, it's looking like, we won't get in up right here where we are, right? So if we took a ruler out where we are now to the top of the high here, we're already 100 points. So we get our GAN box ready, right? So we only have a Fibonacci retracement tool for this one. We wait for the cross, we anchor the short-term high to short-term low, and then we have our trade. If the market comes back and offers us fair value, that's what it's called, then we have an entry. It kind of does feel like price is just going to jet, though. I have that feeling, but it's not a good feeling to ever have FOMO. We have all these inefficiencies in here, if you follow my pencil, that it might want to come back for. So this is the ultimate test of your discipline, right? We want to not, if this trade runs away on us, we have to not give two shits. It wasn't meant for us. So the cross hasn't happened yet, so it would be nice if this came up, revisited this, came down, put the cross, we establish a new short-term high in here, is the ideal scenario. I guess I should put the cross on this monitor for people to see. This is just the 50 I have in here. So I have my futures risk calculator out in front of me, or on Gemini, where it tells me the stop loss size and tells me how many contract sizes and how much money I want to risk next to it. We don't know the size of the stop loss yet, so we can't be sure yet on how many contracts. Cross is awfully close to coming out. I would hate to use, here's the other thing, guys, you don't want to keep these gaps untouched ever and get into a trade. Like your stop loss needs to always be absolved in a sense of these gaps. So above it or below it, like never have it. That's just FOMO. So if it came out now and came down to here, we wouldn't be able to get in. I don't trust tap and go when there's no news red folder. So like sometimes it is going to tap the last gap and then just take off. You can see this gap in here. This is where it's very likely to want to come to. I'm going to draw the tool out now because the cross might come out. We can always move it. Put it to the low here, right? And we measure up. Cross is not out, but we can anticipate the cross. If it comes to 50% here, our stop loss would be 82. So it's still too big. If it comes to 61%, which is the 618, our stop loss would be 62, which is doable. So we need it to come to the 618. For 60 contracts, for 60 contracts, sorry, for 7 contracts. Finger on the trigger, the red line's the entry, guys. Fortunately, too, the kill shot hasn't come out. The new change of plan now, on my other monitor, I have a 5-minute bearish gap that got painted. So we can disregard probably this fair value gap here and just use the bearish gap at the top of this candle right here. Ooh, still 73. We tap this bearish gap above us, the 5-minute bearish gap. The signal is not out yet, so we can use the top of the bearish gap, which is sitting right here. We'll use $62, perfect for 7 contracts. Just waiting for a bit more confirmation. I'll let you know when I'm going to hit it and put our stop loss above the 5-minute bearish gap. We might come back and revisit it here, which would be good. Signal is not quite out. See if we can go up a little higher. We're not going to take it on the red line now. We're going to wait till the signal comes out. So disregard the red line for now. We're going to take it when the signal comes out. We're going to put our stop loss above the bearish gap. $618 has been achieved. I want to see how price reacts now. We waited for the actual cross itself. It did not happen. That'd be funny if that saved us a loss. we would have a new anchor at short-term high if this works out. We have to watch. There's a new macro starting. We do not want in the macro to come up and take these highs here of the range. It's a concern I'm having right now, but we'll see how this 5-minute bearish gap holds out. Very slow movement. That's okay. I like watching paint dry. Nice and boring, the way it's supposed to be. No one ever said it was supposed to be fun. Wow. It does not really want to make its mind up, eh? Actually, here. This is where stop will go right here. So you guys can see that would be your stop loss here, right? Get your ruler out so we know the size. Cross is not out quite yet. About to come out here real soon. Get an estimate here. 58 to there, that's... Yeah. Once we brought it to here. It's the new short-term high we could use for a stop loss. I just don't like calling that a short-term high if it hasn't made a short-term low. Do you know what I mean? And it's coming back for the 5-minute bearish gap. No signals come out yet. Stop will be... That tool's annoying. Just above the bearish gap, which is right here, I guess. You know what? Let me just drop. I don't want to miss the trade, though. Not want to miss this trade. Oh, wow. The E-mans are just flattened out here. Sorry. 178 to the bottom structure is pretty sweet, eh? Now we're just kind of hung up in this bit of a bearish gap here, and I don't like it. EMAs are flat. I want to see it drop below this low here nicely. Have the cross, the EMAs, stop loss 52. Well, why don't we just draw that box in for everybody? We got time. Let's go to the 5-minute real quick. There's the gap. We're revisiting it too many times, guys. Looking like it might plow through it. Come into this gap here now on the 1 minute. We're starting to encroach on this gap here, the 5 minute, which means consequent encroachment, it's called. It's looking like we'll probably plow through it now. We might have just avoided a loss, unless it wants to come up into this fair value here and seek some of this right here and then go down. But if it inverts this 5 minute, I'm definitely not interested in taking this trade. And we do have an order block sitting up here. Great and very nice order block right here. Following candle is a fair value gap, so sweeps liquidity to the left. Following candle right here is fair value, which might be seeking. Wow. That's good that we waited. We didn't anticipate the cross. I'll drag the other monitor over in a bit. We'll look at that. We stayed disciplined, waited for the cross. The cross never happened, and it saved us. Trends are down. This is continuation model. So I have a valid continuation model here. Now, using the fair value gap bias method, the order flow I use fair value gap high time frame is very bullish, the order flow on this run. So the one thing I did just say was, if we don't get through this order block, we might have a sell. But in the macro, it probably wants to come and take out the seller stop losses up here at the top of the range, right? Respected this order block here. I was going to draw it in for you guys. For those of you that aren't good at order blocks, it's right here. Sweeps to the left, following candles in imbalance. High probability order block, it's called. 5-minute bearish gap has not been inverted. She's still holding up. So what does this pattern show you guys is that we are coming back today. Big, deep retracements if we are going down, which means our stop loss, we probably don't want to touch it today too quickly. Looking like we're using that 5-minute bearish gap as support now. Definitely some volume in these candles today. Pretty good for being halfway through May. We're inside of the second day of macro here. So we do come up and sweep these highs in the next 15, 20 minutes, then we'll get into a sell up here. This would be the engineer of liquidity from here, right? Get sellers involved. We almost sold in here. We're almost one of those victims. This looks like it wants to come up and grab the highs, maybe keep going bullish for the day. Nobody knows. Not here to predict what markets are going to do. It's going to react. We are in the premium right now, and we might want to come deeper into the premium range. Or we want to just engineer some stop losses so they can move the market faster. Might be a lot of orders sitting up here. That cross was close to coming out. We'll have a look at that in a bit. It was really close. Right, would you make up your mind then? We were live on Zoom this morning. I post the link in my Discord. We were live on Discord, live on Zoom. Not a lot of action today. This market just shot right up first thing in the morning. Weren't able to capitalize on anything yet here in the second AM macro, but we'll be trading the third AM macro. So if anybody wants a Zoom link, feel free to ask in the comments or go over to my Discord. I'll have it in my Discord under voice channels called US 30 Live, I believe. You'll find it in there. A little bit of a suspect high, short-term high here, eh? What's that being engineered for? Dropping down below the 50 here. Five-minute bearish gap still intact. Got our ruler out so we know the size of our stop loss. Get my risk management out. Tapped off the order block, respected it. I'll let you know when the signal comes out. Hard to get a tight stop today. Created a bearish gap here. See if we respect it. Oh boy. This is making me not even want to trade today. I don't like what's going on here. Or it's best to have patience for the final move in the 30 AM macro, I think. It's looking like we're starting to form a range, isn't it? You know what happens with the range. Major high, major low needs to get taken out. It's just that sometimes you'd wish it would happen faster, of course. Oh boy, we got some movement now. Is it going to take off on us? It's like something just kicked in the algo here. You can see price moving now. Oh boy, it's way bigger on CFDs. No cross yet. This market means business today, eh? Shit. Cross is about to happen here. What do we got there? 89 points. Can't do it. So get your gam box out. Take your ruler out. Sorry, your gam box. Fibonacci, I guess. Short-term high. Anchor it. And we're going to lose it probably. It's great. This thing just took right off. The cross is out. Let's see. Back to 50%. Can we get in? Yeah, has to come back to 50%. Jeez. No, we're not going to be able to get into this, I don't think. Well, we'll see. What a son of a bee, eh? 88-point stop. The only way is just to risk more money, I guess. This thing's just going to keep going now. Sometimes patience to steal is the only way to do it. You never know with these markets. 618 looks like our only entry. Right here's the 618. That's my entry. Want to sell? If it keeps going down, it won't be. 618. Top of the high, 71. Of course, folks, once it takes out this low right here, there is no trade. Right? $618, the entry. Stop loss will be, fortunately, 71 points. It's not ideal, so we'll use, I'll just risk a bit more. We'll use 7 contracts. MYM. Again, we take this low out down here, then that's it. Trade's finito. So 50% of the range here, sitting right here, doesn't make sense. It's going to come back. This is the breakaway gap. It's going to come back up into here. If it does come back. Can it go back into this gap and just disappear now? Absolutely. You can see here what they were doing. They really didn't want you in. And we will abandon the trade on this low. No exceptions. Hopefully everybody can see the 618, this teal line here. That's our entry. Moment of truth, guys. Is it coming back for fair value? Even at the 618, right? Like we're still looking at, what did I say? 73-point stop. The reason why I don't go past 65 points is because like you need a 1 to 2 minimum, right? So we need 140 points now just to get a 1 to 2, which I'm not saying it's not doable. It's just that now your probability and your odds starts to go down more, right? For a 1, just for a 1 to 2. So it's like, do I really want to risk this now, right? One-hour bearish gap, bullish gap sitting down in here too. That would have been a hard no if it bounced off that. So we're approaching 618 here. But it might stop dead in this fair value gap here, right? You're on the trigger. And then increase it to 8. Actually 6, I mean. Sorry. Decrease it. That might be all. You have a beautiful 5-minute bearish gap that just formed. The price may want to return for. Look at this. You see it? Coming up to it. It is right here. That's 618, sitting right in the 50% of that 5-minute bearish gap. Question is, does it take out the lows here first? Looking like it might. There. 49. Oh, I don't like that. 6. Okay, good. 667. That's our entry. Well, doesn't look like it's coming back, does it? Mm, this low is not that substantial. I might be able to ignore it. I mean, that's the thing when something's trending, it makes lower highs, right? So it has to come lower. The highs are getting lower and the lows are getting lower, so it has to break sometimes when you're taking these continuation models. It's just that that could be a good reversal there, but it's minor sell side liquidity, so I'm not too worried about it. It isn't the absolute bottom of structure or anything, right? Then we absolutely wouldn't be looking for a sell. Come up to the 618, baby. Come on. Came to 50% of this gap in here. It'd be great. That'd be somewhere right in here. All right. Percent of this gap. There, okay. Here's how we take this trade if it comes back. Now that we've taken out this low, we want to be sure. Tapping into 1 hour bullish gap as well right now. So we want to come up into here, right? Respect this gap, and then when it closes over the 50, that's how we know we want to get in. But it's looking like time is, we're out of the macro here. Looking like we want to go down quite a bit more. I'm going to end the stream here, go over to the Discord, and fire up Zoom. And anybody who wants on, let me know. If not, have a good day. We'll see you tomorrow. It's just a Monday, so Mondays can be like this. You can see we had the right idea, though. Like, the sell model was in place, right? And this thing here actually moved, right? 200 points. So we were absolutely correct on the direction. It just sometimes it just doesn't let you in. That's just the way it is. There's nothing you can do about it. And you have to be okay with it. You can't get pissed off. You can't be like anything. It's got to be cool. And know that tomorrow's another day. All we can do. All right, folks. We'll talk to you later. See you tomorrow.